Reports recently have indicated Melbourne saw the largest decline in property values over June, with a 1.1% fall on the previous month. As Sydney continues to exit lockdown and market confidence grows, we realise that the market is so different state by state. Josh Masters joins me now and gives us an insight about the differences. Hey Josh, welcome to the show.
Thank you, Kev. Thank you for having me.
Pleasure, mate. Now, you mentioned that values fell slightly in June across the cap cities. Let's bring up the medians from your report. Firstly, we'll have a look at houses, Josh. We can see there Sydney, yearly growth 15.5%. Nothing shabby about that, is there?
No, look, that's a pretty solid growth rate. But we have to be mindful that that is a 12-month growth rate, and obviously you'd have to be living in a hole to think that the last few months haven't taken a dramatic effect on the marketplace. So the first 6 months of last financial year, July to December was a stomping growth rate for both Sydney and Melbourne, and they really surged forward after a couple of years of decline. But now we're starting to see things really plateauing out, which I have to say is probably a positive thing given the circumstances. We haven't seen any dramatic declines, but I guess the news reports now have to talk about something around June and even from March, and they're talking about declines, but we're really only talking about probably 1 or 2% around, give or take 1 or 2% around the median price point, which is pretty solid given all things considered.
Okay, well, we'll come back to these figures in just a moment. We're going to walk through the cap cities with Josh as well and talk about some of the key findings in his report. But before we do that, let's bring up the unit report, similar to houses, following the same areas. What's your view on that, Josh?
Yeah, units are trailing houses slightly. Obviously, the investment focus has probably slipped from most people's minds. On the ground, as a buyer's agent, I'm finding that there's still quite strong demand in the housing market. People still have to live somewhere, but the urge to get back into investments probably hasn't come really back into favour just yet. Obviously, the yearly growth is measured from 12 months right through to today. But if we were to look at the most recent growth, the last month or the last quarter, we probably see a slight decline greater than houses over that same period. Yields will obviously be a little bit higher, but I think probably another conversation that we could have here, Cav, is really around the vacancy rates that we're starting to see in some of these unit markets, particularly in inner city, Sydney and Melbourne, where people just aren't going into the city anymore. We've got a lack of overseas people coming from either interstate or overseas to travel for work or students. And we're not seeing people using the city as a base to go to their office anymore. It's like a ghost town out there. So we're seeing vacancy rates above 5% in some of those areas, and I think we'll see some of the data here lining up that stock levels in the city are now hitting 40% plus coming onto the market for rentals, which is unheard of, really.
Mm. Well, we'll go back to that original house graphic. We'll keep that up as we walk through the cap cities and just get some of your key takeaways or what you're talking about in each of those areas. Sydney, you focus first up on the job market.
Yeah, look, I think underlying all property markets is the economy, and if you're interested in how the property market will perform over time, we have to look at the economy. We have to look at how jobs going. Obviously, we're going to be talking about Melbourne in a minute, and the sort of downturn into the second COVID sort of response. But right now, we are concerned about where jobs are going for the Sydney market and how that will perform over time, and what will happen once stimulus ends. Right now, the market is remaining pretty resilient. Falls slightly by 0.8% over June, which is really negligible. Auction clearance rates are bouncing back. We're seeing some good stock levels coming back onto line. We were really struggling here with finding good stock, which I think has been holding prices up generally. But confidence is definitely growing. We're seeing that. So that's been solid. But again, one of the key points that I make in this report is, REI in New South Wales puts the inner ring vacancy rate at 5%, which is the highest in 18 years. So we're really seeing changes in these particular markets, which we haven't seen before, and is not reflective of all of the capital city. We have to take each sort of little market as it comes.
Yeah, we're seeing the inner city, certainly in Sydney and also in Melbourne, being quite resilient. But you are reporting that inner city units and even some of the outer suburbs are not proving to be, well, they're proving to be much less resilient. So, mate, let's go to Melbourne. And there we look at, well, as you just mentioned, I guess all the focus has got to be on those new restrictions for COVID.
Yeah, look, my heart goes out to the people in Melbourne going through that second round, and look, fingers crossed we don't have to go through the same thing. But, you know, Melbourne used to be the poster child of overseas migration and interstate migration, and it really drove population growth and hence transferred into rising property prices. Now that's all finished for the time being. So we're really suffering of people not coming into the marketplace. We're seeing the inner city market really being drawn away and having huge vacancy rates there. And obviously, this second wave of restrictions coming in, it's not going to be favourable. And obviously, a lot of real estate agents who thought they could get back into the swing of things and start opening up for auctions and getting people through public inspections now really have to go back to a trickle of people going through their open homes and trying to sell those in that environment. It's very tough.
You point out that Melbourne actually recorded the highest fall off in property values in June, and I guess prices are definitely the focus in Melbourne. I think you mentioned in your report Domain's Trent Wiltshire saying that he believes that Melbourne's going to be the hardest hit in terms of prices.
Look, at present, I think that's very correct. Given this second wave, I mean, no one wants to go through a second lockdown. The fact that Melbourne has had to do it and nobody else has at this point kind of points to the fact that they will find it difficult to see price increases. Yes, they have had the biggest decline in values, you know, over June and the quarter. I think from memory, CoreLogic was recording, you know, minus 2.4% for the quarter. But, you know, is that a big thing? Minus 2.4%. Yes, if you extrapolate it out to the year, we might see a more significant fall. But, you know, if it rises another 1 or 2%, you know, in the next quarter, then it could all be made back. So I'm not taking those monthly sort of changes, you know, to heart right now. I think we take it with a grain of salt. But I have to admit the outlook doesn't look great. And obviously, you know, the stimulus measures coming off in September and October will probably have a more of an impact in that respect as well.
Let's go to the Sunshine State, Brisbane. And Brisbane there, of course, the focus has got to be on border closures. And given that there's so much tourism reliance in Queensland, that's had a pretty big impact.
Yes, it has. And look, people moving interstate or coming from overseas, obviously the tourist dollar in Queensland is driven by that, which is great. Fortunately, I know you're a Queenslander heart, Kev, and you're probably enjoying the fact that you have very negligible numbers when it comes to COVID. So everybody within the state is doing fine on a health perspective. I don't think the investment market is doing great there right now. Obviously, apartment approvals are at an 11-year low right now, as we've said in the report, down 7.4% for May, which is you know, translates through to construction and through to jobs effectively and how people spend money. But there is a resurgence in, I guess, tree change properties, and those who have seen this dilemma with COVID and thought, you know what, I think we need to get into a bigger property. We don't want to live in the city so much or around people. Let's go out and buy a little bit of acreage and have the space to ourselves. And if anything, that's a positive thing. And of course, regional hotspots like Sunshine Coast, Mackay and Gympie, Mackay, I should say, and Gympie, all performing well with an average increase of 4%, according to CanStar. So, you know, I think we're going to see a change in the way people do a lot of things. Work environments are going to be one of those. And look, there's nobody that I've talked to that is keen to go back to their little office cubicle in the city. I think a lot of people are looking at the way we work now and things like Zoom and how we can work remotely, and saying, you know what, why don't we focus a little bit more on family, go to these areas with a little bit more of a lifestyle focus where we can still work and be productive, but we can also enjoy family time and not be living on top of each other in the urban dwellings that we're so used to.
Indeed. Well, Darwin and Perth, two areas, as you might recall from our earlier graphic, showing negative results year on year for properties in both houses and units. Let's have a look at Perth firstly. Forecast is a bit of a bounce back. Maybe building numbers are looking more healthy.
Yeah, it looks like building numbers are a little bit more healthy, and it was interesting to read that HIA had recorded, 132% rise in consumer interest in display homes. I think the home market is definitely there. I don't think the investments are going to be bouncing back anytime soon. Obviously, Perth and Darwin coming off very low lows. Really, they've been languishing. Really, for the last 5 to 10 years, and really haven't seen that bounce back. Auction clearance rates in these states aren't anything really to speak of. It's not a strong method of sale. Sure. But all in all, we may be seeing some green shoots there. Hopefully, we'll have to see how that goes.
Yeah, we've heard of that happening in Perth before. We'll get to Darwin in a moment. Before we do, let's go to Canberra. And Canberra's an interesting market because probably over the last 6 weeks, they've recorded record high clearance rates, although this last week they fell behind Adelaide. But certainly a resilient market, Canberra.
Very resilient market, driven mostly by government bodies, of course. And, in a health crisis like this, very manageable to be able to lock down and keep people out where they need to, which is probably given some confidence to the people in the Canberra market. And auction clearance rates are certainly showing some positive signs there. In the last week of June, they had 84.4% auction clearance, which is unheard of really in this time. And look, over the year, Canberra hasn't been doing too bad. This has definitely been one that we've had our eye on for the last 12 to 24 months in terms of property pricing. Obviously, the markets have been very solid, and one thing that isn't mentioned here is the rental market. As far as the country's performance goes, the rental vacancies in Canberra have been extremely low. They've been in 1 and less than that, 1% less than that. So very, very solid in terms of investment moving forward. But the focus just isn't there right now. Most people are focusing on either buying a new home or shoring up finances. So we're seeing only a trickle coming through to the investment space.
Mm. Adelaide is next on the agenda, and that's an amazing market, Adelaide. Certainly not one that gets a lot of headlines, but it is a pretty solid performer. There's some great suburbs in Adelaide that are doing quite well, Josh.
Yeah, they have been quite resilient. I mean, Adelaide's only, a population of probably half of Brisbane, odd million people or so. One thing I thought was interesting coming from the Real Estate Institute, just saying, the market's very steady, but if we had stock increases here, and that translates to people feeling more confident, listing their homes for sale, we would have potentially some issues with pricing here, which just goes to show, I think, countrywide, the confidence has bounced back somewhat, and Melbourne Institute is saying that 16.4% in the last month as a bounce back for confidence. But most people generally aren't that confident that they'll get the same prices that they would be happy with maybe 12 months or 24 months ago, and simply aren't listing their property, which is keeping a real crimp on supply. And when that happens, you can have these buyers coming into the marketplace, but if there's no stock to buy, it really either it keeps prices plateaued or it drives prices up. And that's what we're probably seeing in Adelaide as well. I mean, some of these areas like Glenelg North and Henley Beach, recording 1 year increases of 23% with these sea change areas, I think is fantastic for the people in that area, and hopefully we'll see more of that.
Let's round out this report by having a quick look at Darwin. Darwin seems to be, and you highlighted in your report, as defying all the odds. REA reporting very good buyer activity in Darwin.
Yeah, look, it's defying the odds in that it's not falling anymore, which is a great sign. I think Darwin's really been whacked with a big stick for the last few years. They lost some LNG contracts. Obviously, the mining downturn really hit them, and they haven't really bounced back. But in this time, they've been quite resilient, and I think again we're probably seeing buyer activity coming in. One thing that we haven't talked about to this point is, quite frankly, we've got the lowest of low interest rates that we've ever seen on record. It's actually more affordable probably for a lot of these people to actually go in and buy property rather than rent.
No, indeed. A great report, and you can get a link to it on the underneath this video, so check it out for yourself. My guest has been Josh Masters from Buyside. Josh, thanks for your time and thanks for your insight.
Thanks for having me, Kev.